Hello. Welcome to my channel, my dear friends. My name is Abhilash and I'm a trader next door. In this video, I'll be analyzing the chart of Euro USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, what a move we got on the chart of DXY, Euro USD, GBP USD, Gold USD and others. And the reason is US dollar slumps after weak data markets betting Fed near end of hiking cycle. The US dollar sank to a 2-month low on Tuesday as another round of weak economic data reinforced investor bets that the Federal Reserve is nearly done with its tightening cycle, even as other central banks are seen still raising interest rates to overcome persistently high inflation. Yes, ECB is also on the list because ECB is also not done with the inflation hike, not the interest rate hike. Okay. So in the medium term, in ECB will be going for in further interest rate hikes, not like the Fed. And you can see here data showing US job openings in February dropping to the lowest in nearly 2 years, and the continued decline in factory orders undermined the dollar as the number indicated that rate hikes may be nearing an end. And this was the main reason why we saw a big drop on the chart of DXY yesterday. Right now we can see that DXY is standing at 101.52. So clearly we can see that both fundamentally and technically DXY is under pressure right now. And most importantly, NFP is round the corner just after 2 days. So NFP will also bring some crazy volatility to the market. So before NFP, we have support around 100.83 on the chart of DXY. If the fall continues, which is very much possible, then this level will try to provide some support to the market before NFP. And if market tries to recover, then obviously the road will not be very easy because we have multiple resistances, and the first resistance on the chart of DXY will be 101.90 to 102. The previous support will now be acting as the new resistance. So this is all about DXY. Now let's have a look at the chart of Euro USD. And here is the Forex chart. Yesterday we discussed about the possibility of a big breakout on the chart of Euro USD because of the ascending triangle pattern. We discussed about the ascending triangle pattern, and to be honest, I was not expecting that right after the video we would get the breakout. And now we can see that Euro USD is standing at 1.0962. So if you already have a buy position, hopefully you have a buy position right now, and if you have a buy position, then you can be on the trade. No need to exit because there is further upside possible on the chart of Euro dollar. And if you're holding a sell position, man, my dear friend, things will be very critical because already many people have lost their accounts. I know that. Okay. So please try to protect your capital. If you are holding a sell position, then it's high time to come out of the sell position because overall the market sentiment is extremely bullish, so further upside is possible. And if you're looking for fresh opportunity, fresh trading position in the market, then I'll say that you need to wait for the market to retrace. And as we all know, in this market situation, when the market is in uptrend, buy at dip or buy at retracement is the best trading solution or the strategy that you can follow. So in this market situation, when market is standing 1.0963, wait for the market to come down. The first level we have is around 1.0930. Around this level, there's a high chance the market will get some support. Instead of 4 hours time frame, you can switch to 1 hour time frame and just observe the market. If you see the market is showing some price rejection from below, market showing hammer kind of a pattern around this area, you'll get the confirmation that yes, the previous resistance is right now acting as the new support and you can go for a buy position. In case the correction continues and if you see that market is not respecting 1.0930 as the retracement level, in that case wait for the market to come down to the next level of 1.0900. Around 1.0900, it can be 1.090305 also. Okay, around this level, okay, you can expect the market to take some support. This will be the next support on the chart of Euro USD. So I'm giving you two retracement levels for the day. If you see market coming down to the levels for retracement and bouncing, you can go for a buy position because we need to respect the trend of the market. Okay, and as we all know, the market sentiment is bullish right now. And on the other hand, if market does not come for retracement and you see market going for a breakout, then it can be little risky, not little risky, quite risky, because no market in the world goes up in a straight line or goes down in a straight line. Eventually market will come for some retracement. So after a breakout, when you see the market is not coming down for retracement, then it's better to wait. But still, if you if you cannot wait, okay, then you can look for a buy position above this level. If you see a big breakout, you can go for a buy, but keep the lot size small. If you usually go for a lot size of, let's say, 0.5, then take a lot size of 0.1, because at one point market will have to come for some retracement. No market can go up and up all the time. And if we look at the economy calendar or forexfactory.com, you can see that today we have ADP non-firm employment change and ISM services PMI. So yes, you need to be careful again, because market is about to show some volatility during the US session. So as I always say, my dear friends, do not gamble with your hard-earned money. Okay, capital protection should be your first priority. If you're a beginner, new trader, unable to understand what is going on in the market, try to close down all the US dollar positions just before the news, because you'll get plenty of opportunities when the market will be. And this week is full of news, so be careful. You need to be extra careful, and risk management should be your first priority, because one miss and you may end up losing your capital. As I said, nobody was expecting that market would form this kind of massive candles. My reference, because if we look at the Forex sentiment meter, which shows the position of the retail traders, we can see that 82% retail traders are still holding their sell position, or they have their sell position, and only 17% retail traders have taken long position. So 82% retail traders sell. Average short price is 1.0808, and right now we can see that market is standing at 1.0962. So there is a difference of almost 150 pips. So it means that, in simple words, 82% retail traders are at a loss of minus 150 pips. So if you are on the list, then please, it's high time to cut down your sell position and follow the trend of the market. So that's all from my side. My dear friends, this is my analysis. I can be wrong as well. So follow proper risk management. And I'm also a trader like you. So no trader is 100% accurate. So calculate the lot size according to the stop loss and capital. Capital protection should be your first priority always. Do not gamble. Bye bye. Take care.